Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Sunday the 15th of March to see whether the price action next week will be on the bullish side or the bearish side, and to anticipate where is the best possible spot to enter a trade, where is the best possible spot or the zone to enter a position. Right, but before you guys watch, please subscribe, like, comment and share if you like this video, and to support me in my trading journal. Now today I'll start by analyzing on the daily time frame first, because we can see on the daily time frame that the day one price has broken support, right? Price has broken support from here, from the first candle on the Thursday, right? On the Thursday, this candle has already broken support, this support over here, which is also the reversal, and has also broken the weekly support and the support at 5,100, which is also a key support because it is a psychological support, right? And then after breaking support, the next candle push up to retrace before pushing down, as we expected. Because why? Because candle breaking support, we will see more chances of the chart just retracing before dropping down, and the chart really did that, because after retracing, and this retracement was to clear off or take out sellers or sell side volume, and after taking off sufficient sell side volume, the price then pull back and then drop down, right? And when the price push up, you can see that when the price push up, there is a spot that the price has accumulated sell side volume first before taking out those sell side volume. At which spot? The spot is over here at 5,100, because after breaking this 5,100 as a support, it becomes a resistance, right? When the price is below the 5,100, it is a resistance. If the price is above 5,100, it is a support, right? So after breaking this 5,100 support on the daily time frame, which means this 5,100 becomes a resistance, and then the next candle push up to start accumulating sell side volume at this 5,100, correct? And after accumulating sell side volume, the price then break above to take out those sell side volume, which also means it is a break above to take out stop loss, correct? Because traders entering a sell side position at 5,100 would have placed their stop loss 1,000 or 2,000 pips above their position at most, right? And after placing the stop loss 1,000 or 2,000 pips above their position, and price push up to sweep off their stop loss, after sweeping off stop loss, people that get their position closed, they are in a loss, correct? After the market pressurize people into closing their position, either by attacking stop loss, either by sweeping stop loss, or pushing up, right? Pushing up and pressuring sell position holders into closing their position. After pressuring enough sellers into closing their position, the price then pull back and then drop down further, which means it is, as our theory suggests, that market wouldn't allow sellers to profit with the market, correct? Or I don't say the market, I'll say the big money. The big money wouldn't always allow retail traders to profit with them, because they will find every spot possible to pressurize retail traders into closing their position before they start going on the initial trend. If they are looking to go on the upside, they will find every single way to pressurize buyers into closing their position before they can start going on that initial trend, which is an upward, correct? Which means price needed to go downward, price needed to expand downward, means that it first has to push up, pressuring those sell side holders, right? Those sell side volume holders into closing their position before the price can pull back and then push down, correct? Which means when the price is going down, there will be little to no sell side position holders on the retail trader side, right? And when the price is going up, there would also be little to no buy side position hold by retail traders going up, correct? Because the big money needs to take out liquidity to profit, right? If the big money isn't profiting, who is profiting? Of course, it is the retail traders, correct? Which means the big money never allow retail traders to profit off of them, right? It will sometimes be once or twice that they'll allow retail traders to win, right? They allow retail traders to win a few hundred pips, right? A few position on a few hundred pips before they take out all of that and they drag you down into a drawdown of a few thousand pips, which means they will give you a few hundred pips as a bait, right? They'll bait you with a few hundred pips, allowing you to open a few position, allowing you to open multiple position, and after you start overloading or over trading, right? Only after you start over trading, you open position size that are not meant to be, only then they will start taking out your orders. Which means if you're not over trading, if you're not opening a position too big for your portfolio, you will never be losing, right? But after you start being greedy, after you start being overconfident because you're winning a few position before, right? Previously you have win about 5 to 6 position continuously, and after you start being overconfident, you start opening bigger position, you start over trading, you start opening position that are too big for your portfolio to handle, you start opening position that are too big for your capabilities to handle, and after that happen, the big money will start hunting down your position. The big money will start hunting down your stop loss, right? You have seen that happens multiple times, and all you blame on is your luck. All you blame on is banks are out to get your money. No, bank wasn't all out to get your money, but it is just typical market manipulation. They are not out just to get your money. They are not out just to get a few of yours money. This is just typical market manipulation based on psychology, based on price action, based on market pattern, market movement, right? And also based on human psychology. Before they enter a position, before they start accumulating sell side or buy side volume at support and resistance, before they start allowing traders to enter a position at a few specific point, they have already analyzed where is the most possible spot or key zone or key level that retail traders are going to be entering that position on, and then they will start taking out position from that specific spot. They are not always looking out to get your position, they are not always looking out to get your money, but this is just market manipulation. This is just typical market manipulation based on what is happening on the market, right? They are not out to get only you, they are out to get everyone that is in the market. It is a competition, right? It is a battle. This trading game isn't for the weak. You need to be able to understand every single market movement. You need to be able to understand every single market manipulation before you can start buying, before you can start selling, before you can even start analyzing what the market is doing. Because if you do not understand shit, you're not going to be able to even analyze the basic movement of the chart, right? So everything that is happening in the chart right now, everything that is happening in the market right now, there are reasoning behind it, right? Every movement is a movement to take out sellers. Every movement is a movement to take out buyers, right? Any movement can be a movement to pressurize. Sometimes a break below means taking out buyers, right? A break below and then pull back means taking out buyers and then pull back, because a break below is to sweep all those stop loss from buy position, right? But what if buyers doesn't play stop loss, buyers doesn't use stop loss? What is going to happen? If buyers is using stop loss, a break below and then a pullback means that buyers have got their stop loss swept, correct? Their position is closed. But what if the price break below and buyers do not play stop loss? or a few specific buyers or a few thousand specific buyers do not use stop loss, what is the market going to do? The market is going to break below further and further. Why is it going to break below further and further? It is pressuring those buyers into closing the position and will only reverse after the buyers have closed all their position, or at least there are little to no buyers at all in the market before they can start reversing, because all of this is based on market volume, not just market manipulation, not just market movement, not just psychology, right? Buyers need to stop buying before the market can go up, because the big money wouldn't allow most traders to profit with them, right? So the thing we need to do is we need to understand which is the specific spot that the big money is pressuring small money into closing the position, which is a specific spot that the big money is sweeping out stop loss, right? There are sometimes break below means sweeping stop loss and then pull back after sweeping enough stop loss, or break below, then breaking support, and then start pushing down further and further. And why does it start pushing down further and further? Because people are buying and then holding on to their position. That is why the market keeps moving down and down and down. Correct? For you guys with enough experience in trading, you would have known that the market is always doing the same thing. It is always repeating history. Because why? Because everybody is doing the same thing. When the market is going down, you'll always buy against a trend. When the market is going up, you'll always sell against a trend. So that is why when the market goes up, it goes up a lot, it goes up heavily, right? It reverses and then push up heavily because people are selling. If people are selling at every resistance there is on the market, people are buying on every support there is on the market. Every support they can see, they'll start buying. That is the reason why markets keep expanding downwards continuously, keep expanding upwards continuously, right? And this continuous expansion means accumulating buy side volume at every support that it creates on a chart, right? Accumulating buy side over here, accumulating buy side over here, accumulating buy side over here. And after accumulating enough buy side volume, or after accumulating quite a heavy concentrated accumulation of buy side volume, the price will start breaking below, and a sharp break below is that sharp break to force all buyers into closing the position or force buyers into liquidation before the chart start reversing. So you need to be able to understand what the chart is trying to do, because every movement means something. There are movements to sweep stop loss, there are movements to pressure position holders into closing the position, there are movement into trying to accumulate sell side volume, buy side volume, right? There are movement into, but actually there isn't much movement that is to be pointed out, right? But there are always reasoning behind every movement. Every movement is either pressuring or accumulating, correct? And after accumulating enough, it will start breaking below. After pressuring enough, it will start breaking below, forcing position holders into closing their position before it start reversing. If you do not believe what I said, you can start tracking down all those statistics. You can start tracking down all market movement about what it is doing. Don't do back testing, do front test, right? Front test on the market, test what is on the market live. If you do not have the capital to start trading, or if you're not really sure if my theory is working, you can start front testing without entering any position, but just imagine that you're entering a position at a few specific spot, and you'll see that there are times when the market stop accumulating and then start going on. You'll find that the best position is the position where retail traders are not entering at the same place as you, right? So try to do what I've said, and then come back to me and comment about what you think after this. So for today, that's all I'm gonna be analyzing. and I'll see you guys tomorrow. See ya.